you might be able to retest 49,000 on the chart. We've been stalling out right here. That's a bullish pattern. It can potentially break out underneath this upsloping trend line. Bitcoin has a chance here. Remember resistance, then it became support, 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 support. You have a window here on Bitcoin. We broke below it and it continues to be resistance. Then be careful because it could really start to dump out.
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Seller. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Seller. Gareth Soloway, a renowned technical analyst and crypto expert. In this video, Gareth will share his insights on the charts of Bitcoin, gold, and the Nasdaq 100 and how they are affected by economic and monetary factors. He will address some of the key questions and challenges that many traders face, such as: how does Bitcoin's resistance at 44,000 shape its next move? What's the impact of the inverse relationship between gold and the US dollar, and the significance of the head and shoulder pattern on the weekly chart? How does Jerome Powell's rate cut guidance affect market expectations and the Fed Watch tool? How do Caterpillar and McDonald's earnings reflect the economy, and what are the job trends? How does the yield curve movement signal recession risk, and what issues exist in Nasdaq 100's market leadership and breadth? Let's join Gareth in a conversation about these topics and more.
You know your Bitcoin chart. This is the chart I've shown you pretty much every day for the last, 2 weeks or so. Notice again where we've been stalling out. We've been stalling out right here underneath this upsloping trend line. Remember resistance, then it became support, 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 support. We broke below it and it continues to be resistance. Now, what I will say is Bitcoin has a chance here. It has a chance to break through this level. The reason I say that is because if you look at this, and let's zoom in on this chart here, all right? So if we look at this pattern formation right here, what do we have? And let me grace these lines here. We have an up move with sideways consolidation. What kind of pattern is that? We know our patterns, right? Up move, sideways consolidation, right angle, approximate right angle. That's a bullish pattern. It can potentially break out. Now, as of now, it's still stuck at resistance, right? So if it can't get through, then the fastest move is usually the failed move, right? So if, in other words, you have a window here on Bitcoin to break through probably within the next 24 hours. If this can't break through this 44,000-ish level, close above and confirm, then be careful because it could really start to dump out. But right now, this has a shot here to make a little bit of a move up, back above 40,000, 44,000. If it does, you might be able to retest 49,000 on the chart.
Gareth Soloway talked about the Bitcoin chart, which he has been showing for the last 2 weeks. He pointed out a key resistance level at around 44,000, which coincides with an upsloping trend line that was previously supported. He said that Bitcoin has a bullish pattern of an up move with sideways consolidation, and that it has a chance to break through the resistance level within the next 24 hours. He warned that if it fails to do so, it could drop sharply. He said that if it breaks out, it could retest 49,000. We should remind ourselves that the SEC approved the first physical Bitcoin ETF in January 2024 after years of rejections and delays. These ETF track the spot price of Bitcoin, unlike the previous ETF that were based on Bitcoin futures contracts. The first 10 physical Bitcoin ETF launched on January 11, 2024, and attracted billions of dollars in inflows. However, the Bitcoin price has been volatile and range-bound in the past 2 months, trading between 40,000 and 50,000. Some analysts attribute this to the uncertainty and competition from the Bitcoin ETF, as well as the regulatory and environmental pressures on the cryptocurrency industry. Others see this as a consolidation phase before a new rally.
Gold, again, just continues to do its thing. It's got the inverse relationship with the US dollar. Again, what we could see here is gold continues. It almost got back to the high level right here, just shy of that a couple days ago. Then the jobs report came out, the dollar spiked, and that really is hard for gold to fight. When the dollar's going up as dramatically as it did Friday and today, very hard for it to hold back. Now, having said that, we still have a trend line right through here, which we're right onto, right? So we have that level right there, you have this area right here, and then you have this area right here. So there's a lot of supports here. I continue to think that the bigger pattern is the dominant pattern. If you look at the bigger time frame For instance, if we go to a weekly chart, the weekly chart, very, very important to just continue to remember this pattern. So whatever this does over here, and again, this is the weekly, so you see how insignificant the price action is. This is the pattern that I'm focusing on. Shoulder, right? Shoulder, head, shoulder. And again, hasn't broken out yet. Has to break the neckline and confirm. But that's the bigger dominant pattern. So again, you get this choppiness in here. The only thing that would concern me is if we start coming down to the low of this shoulder again around 1850, 1800. You start doing that, then that pattern could fail. But as long as you're trading in this range, and gosh, we're still above 2000, this pattern is the most dominant pattern. Therefore, my job is to go with that pattern.
Gareth talked about the gold chart, which he said has an inverse relationship with the US dollar. He said that gold has been doing well, but faced some headwinds from the strong dollar after the jobs report. He said that gold still has a lot of support levels and that he is focusing on the bigger dominant pattern of head and shoulder formation on the weekly chart. He said that this pattern is bullish unless gold breaks below the low of the right shoulder around 1850 or 1800. The non-farm payroll employment report for January 2024 showed a strong increase of 353,000 jobs, above expectations, and with an upward revision of the previous month. This boosted the dollar and weighed on gold as it signaled a robust and growing economy, and raised the expectations of inflation and interest rate hikes. The gold price has been resilient and stable in the past year, despite the challenges from the pandemic, the rising bond yields, and the competition for Bitcoin. Some investors see gold as a safe haven and a hedge against inflation, while others prefer more risky and innovative assets. Gold is also influenced by the supply and demand dynamics, as well as geopolitical and social factors.
So number one, last night Jerome Powell was on 60 Minutes, and he basically said 3 rate cuts is kind of what the Fed is guiding towards. That's what they're thinking is their maximum amount of rate cuts this year. Remember, the markets were pricing in 6. It's now down to 5. We'll take a look at that Fed watch tool in just a minute. Now, again, the key here was the first rate cut to be expected in the second half of 2024. So again, we'll take a look at some key things on the Fed here. But again, Jerome Powell very strongly guiding the market towards 3 rate cuts and starting in the second half. I looked at the Fed watch tool just a little while ago. The market is still pricing in May as the first cut. However, we are seeing some adjustments later on. We'll cover that. Next up, Caterpillar beats on earnings. They missed slightly on revenue, just by a hair on revenue. The stock is moving slightly higher today on the back of the earnings beat. All right, let's keep it going. This is where things get even more interesting. All right, so the yield curve. We know about the yield curve, how it's been inverted. Interestingly enough, just a couple weeks ago, it was looking like the yield curve was going to uninvert. Now, again, historically, what we do know is that when it uninverts, that's usually when the market begins to fall, right? It's interesting, but that's really what ends up happening. The inversion portion is usually the preemptive portion before the stock market starts to fall and the economy spins into a recession. Interestingly enough, because of the strong jobs data and the other economic factors out there, we are seeing the inversion start to increase again. So it was just about to uninvert. Now it's starting to widen its path again, which again shows us that that economy in the short term is strong and the uninversion persists. Next up, government jobs continue to surge while private sector layoffs mount. So if you looked at the data on Friday for government jobs, you saw that, again, another spike higher in government hiring. We obviously know the debt that is going on in this country here in the U.S., really globally, let's be fair. But again, the government continues to hire. We continue to see almost daily announcements from private sector jobs, publicly traded companies, of continued layoffs. Now, again, the layoffs are not amounting to anything significant to push the non-farm payrolls into negative territory, overcompensating for the government jobs, but it is something that I think we have to watch as a trend going forward. Next up, on Friday, if you took Meta, Amazon, and NVIDIA out of the NASDAQ 100, the index would have been down. Think about that. The NASDAQ was up, 200 plus points on Friday. If you just took out 1, 2, 3 stocks from the NASDAQ 100, the amount of points they contributed the market actually, the NASDAQ 100 would have been down. Now, the reason why this is important, it tells us something about market breadth. It tells us that there are a few stocks that continue to lead this market very sharply to the upside, while a lot of the other stocks are stalling out. In fact, if you look at the breadth, right, 52-week highs were 52-week lows. If you look how many stocks are trading above their 50-moving averages, believe it or not, it's not very many at this point, a very select few.
If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.